Axel Merk of Merk Investments joins me this inauguration day to talk gold and Trump. Axel, welcome back to the show. Good to have you back on.
Great to be with you.
So gold investors are still trying to figure out what a Trump presidency will mean for gold. What are you making of gold's price action ahead of the inauguration here, Axel?
Well, in the immediate aftermath, the world looked great to investors, and most notably what happened is people priced in higher real growth. And as Trump is settling in, reality will kick in, and people will see the world more in shades of gray. Ultimately, what matters for the price of gold, how real rates will fare, and whether the higher yields that we have in the bond market reflect higher real growth or higher inflation. If you think about a stimulus package, for example, to the extent it comes through, if we have a stimulus on the backdrop of low unemployment, that means that we're going to have more inflation. And so if you look at the entitlement reform that's being proposed, well, there hasn't been any proposal. That means I don't think we have sustainable budgets. And that means even though everybody expects change, just like with any other administration, we might not get as much change as we anticipate. Now, that said, there are things in the tax code and so forth that will have substantial changes. But for the time being, to the extent that we'll get inflation, gold should do well. To the extent that we get substantially more real growth, gold might suffer.
Well, some analysts are suggesting that gold's momentum could quickly run out of steam, but from what I'm hearing from you, it's still worth it to hold gold.
Well, a couple of things. First of all, many gold investors are technicians. Because gold is a brick that doesn't do much, when the chart doesn't look good, many gold investors go away. In the long run, I certainly like my gold, simply because we haven't taken care of the long-term entitlement issues. And also, if you think about it, we are pricing in a very hawkish Fed. If we're going to have a very hawkish Fed, maybe, but I wouldn't be surprised if the Fed is going to continue to be more and more behind the curve. If you look at the CPI, inflation is ticking up. And so, yes, we'll get higher rates, but I think we'll be mostly getting higher nominal rates. And also, if you look at it from a different point of view, asset prices overall are very expensive. Well, if we do have a tumble in asset prices, people may flee somewhere. I think gold is one of the places they'll flee to. So as a diversifier, it certainly makes sense. We like it as a diversifier simply to take the inflation scenario into account.
All right, well, let's talk about one of the thorns in gold's side here then, the US dollar. How do you expect President Trump to affect the greenback?
Well, again, right after the election, the dollar surged. Now, keep in mind, the dollar has gone up, the dollar index anyway, has gone up 4 years in a row. Now, the dollar index obviously has a heavy euro component. And just recently, Trump said that he doesn't like the strong dollar. Now, obviously, he likes to have his cake and eat it. The reason he doesn't like the strong dollar is because he wants to have more exports. But obviously, when you look at the dollar, you have to look in the context of what's happening around the world. And the storyline that we've been fed is that everything is great and the euro is going to get better and everything is horrible in the rest of the world. Well, while I agree that there are lots of trouble in the rest of the world, it's a question of what's priced in. Okay. If you take Sweden, for example, there's a dissent because some colleagues at the Riksbank of the governor are fed up with all the money printing. At the European Central Bank, I think we have seen the kind of the maximum as far as easing is concerned. And so I wouldn't be surprised in 6 months from now, the Fed is not going to be as hawkish. And by the way, the Europeans are not going to be as dovish. And what that means is that maybe the dollar is going to come down. And yet again, that's bad for the dollar, and that might just be good for gold as well.
Well, we will see what 2017 has in store. Axel Merk, thank you so much for joining me on this historical presidential day. Thanks for joining me.
My pleasure.
And thanks for watching this edition of Kitco's Gold Report. Have a wonderful weekend. We'll see you next week.